Hello investors and traders, I'm L.A. Little. This is your daily NeoTA wrap, where we take a look at these markets, doing it from a neoclassical perspective, looking at supply and demand on the charts. We're using that information to make decisions, wise decisions, about when to enter, when to exit, which side of a trade to be on. Do the show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube and under the channel L.A. Little. If you want to subscribe, reach up in the right-hand corner, do so anytime I push content. You'll get a notification. And if you're interested in what I do and how I do it, you know, one of the things you can do is think about membership with the program here. If you really want to learn how to trade, that's what we do. We teach. We actually help you make money while you learn. Nothing better than that. And one of those ways of doing so is through Twitter. I use a Twitter feed. I also post charts on a regular basis here with the members. And so if you you come into the this part of the charts, to the ideas, QA, and then pop into the trading ideas, there's a lot of charts that are sitting here, charts that show different types of signals and signals that you can get in short and long, and those charts are available to members on a regular basis. Occasionally I share some of those with others, such as you, if you're not a member, and that's on the Twitter account. The public one is TA Today on Twitter, so if you want to join that, you are more than welcome to do so. So turning to the numbers tonight, you basically had a flat market. It couldn't move. It was flat here in the U.S. You did have gains over in Europe. DAX, CAX, so forth, higher numbers. Oil sells actually all pushed higher, but gold, silver, bonds, all of those pushed lower off of a stronger dollar. Dollar simply bouncing after a lot of weakness. If we turn our attention to the indexes, what you're going to see tonight is still no reversal signs on the indexes. You do have some subtle signals that something's happening, and that happening is that you're going to get a retrace, but it's not strong, and there's certainly no obvious signal yet. You push up on lower and lower volume, but that doesn't stop a move. What stops a move is a reversal. You don't have one yet, but there is something brewing. If you look at the NDX, that was the one that came closest today to giving a reversal, and that reversal would have been an over and back under off this bar. The only reason it would make sense here is because you're coming back up to test the highs. That would be a failed bounce if it were to happen. Didn't quite get the reversal though, because you actually closed higher. Same on the NASDAQ, no reversal there, and also on the Russell, no reversal on the Russell. Matter of fact, the Russell was the strongest one today as it continues to play catch up. Now, one thing you should notice about the Russell is that the Russell is really trapped in a range. It's got a range off of this big bar. It's got another range off this latest big bar. That puts this area of the chart as the serious resistance, and this area down here is the serious support. Anything in between is just more or less noise as it bounces around. If we turn our attention to the sectors, that's where you can see some actual reversals finally taking place. And the one that really stands out tonight is the home builders. You had some numbers in this sector. Fundamentally, did not warm the hearts of the investors, sold it off. Volume expands, big wide price spread, bearish engulfing bar off of a doji from yesterday. That one's coming back in, and I want you to notice how it's doing it. So you had a bullish retest regenerate here. You had another one that was an overlap back here. Those two bullish retest regenerates the area of not so much strength, but overlap was this area here in particular, right? Because it was the bottom of this one. It was the congruent area is what I'm trying to say. That congruent area was the strength. Now, the problem is that as you came back, you did the full retest regen after this breakout, and you got under it. Well, when you get under it, odds are that what was the trend, in other words, the trend was up, that trend probably is no longer up. It's more likely to be sideways now at best, And this one actually goes back up and makes a new high. And this is how people get sucked into these trades, even though it already gave you a warning here. They get sucked into the trade, and today they take them deep, bring them back down, and this is going to come back and test this area again. That's what it's supposed to do, and that is what it's going to do. And you know, it's the sort of signal that you know, you look at and you ask yourself, okay, now how can it go up and make new highs? And you get sucked right back into buying it as a result of that, and then next thing you know, boom, back the other way. If you look at another one that made a reversal today, it was a little bit different. It was another bearish engulfing. That's on these two bars. It's the XLY. Amazon had driven this one for so long so far. Makes a high, comes back, right? Comes back up, makes a new nominal high, and then sells down hard. Now bounces, and it's going to try to reverse deeper. Now, the thing that you have here is what potentially can take place in the indexes, although not to this degree. In other words, the indexes have bounced higher than this. But this is the ABCD structure, right, to come down finally and try to break swing point high bullish retest regens. So you trade into it once, now you're going to come down and test it again, or at least try to get there and test it again. And that's the sort of thing, on a failed bounce, you can get a bigger move to the downside. And that's the thing to keep in mind when you're looking at these indexes. They haven't given any clear signals that they're going to roll. But if they do fail on their bounces, and I'm going to pull up what has been the strongest, which is the NASDAQ and the NDX, if they fell on these bounces, right, those moves can be the larger moves to the downside. In this case, the ABCD structure won't be there, but you can imagine something like this that sets up with a little tiny, let's pull it up and do it again. Let's say that we have an ABCD structure here that ends up being a little tiny bounce, right, can give you a bigger move, right, coinciding with this one, and then again another bounce and potentially a larger move to the downside. That's how tops get formed. That's how in classical literature you'll see heads and shoulders. You know, that's how they get formed. It's really supply and demand, folks. A lot of these, you know, I see a lot of people talk about, you know, one of the most important, shall we say, charts out there, short signals out there in classical is the cup and handle. You know, you see that all over the place all the time. It's really, if you take a cup and a handle, and we'll just draw one in here free form. Let's just say that this was one. It didn't quite do a handle, but let's say there is a handle here. Well, what's it doing? Right? You have a swing point high that forms. You test into it. You either fail or you don't quite get to it, and then you just kind of hang around until you can break through it, and that's the cup and handle. It's you know, Neoclassical looks at just two types of trades. It doesn't look at all these various setups that really are a function of those two types of trades. There's only two types. Everything else is a derivative. Either it's a breakout or it's a retrace. Everything else is a function of those two, and if you look at those two, those all have to do with supply and demand at key points. That's what Neoclassical is focused on, is what are those key things. Once you know what they are, once you know the probability surrounding them, then you can actually make profitable trades on a consistent basis. Have yourself a great one. I'll see you next time. Good night.